VWAP stands for volume, weighted average price. In simple terms, it shows the average price a stock has traded at during the day, taking into account how much trading happened at each price. This means it highlights where most of the money is being traded. You can think of VWAP as the market's idea of fair price. It's simply a reference point. Most believe VWAP tells them when to buy or sell, but it doesn't. VWAP doesn't give you instructions. It shows you where price is trading compared to value. It tells you whether current prices is above it, below it, or moving back toward it. Most traders ask, should I trade this? Instead of asking, what is price doing here? And that's exactly why they keep entering at the worst possible price. When price moves above VWAP, it feels like they're missing out. When it drops below, it feels like an opportunity. So they react without understanding what's actually happening. So how do you actually use VWAP? Every trade comes down to three things: where price is, whether there's enough participation, and how price behaves at certain levels. VWAP only covers one part. It shows you location. The rest still needs confirmation. We still need to observe structure. This tells you the levels at which price has approached and reacted to before. We also have to observe behavior, or what the price does as it approaches VWAP. Does it hold, pull back, or move through it? Participation is volume. We need to know whether there are enough traders or if there is any real commitment behind the move. Using VWAP by itself can keep you getting pulled into trades that look right but have no follow-through. VWAP becomes very useful, not on its own, but as part of the full picture. If price moves into VWAP and quickly pulls back, it means there's no stability there. Stability happens when price reaches VWAP and stays there. If price moves into VWAP and holds, volume increases, and price stays there, now you have something to work with. Now you have evidence. The process is simple. First, we look at VWAP, then wait for price to move toward it. As the price reaches VWAP, watch how it behaves. Does it hold, pull back, or move through? Next, confirm with volume. Look for real participation behind the move. Then wait for the candle to close before making a decision. Let the chart prove itself so that you are not chasing or guessing. And when you decide to act, start small. The size of your position affects the way you think. If your position size is too large, emotions can take over. If you control your position size, you are able to stay calm and think clearly. But there are times when, even when you do everything right, trades can still fail. VWAP works best when the market has clear direction. In those conditions, price tends to respect value and moves are more likely to follow through. But in choppy markets, price can move back and forth across VWAP without holding. You'll see the price go above it, then below, then back again, without commitment or direction. So you have to constantly ask yourself, what type of market are you in? If the market is clean, VWAP can be useful. If the market is choppy, it turns into noise. And in those moments, the best decision may be to do nothing at all. Not every level matters, and not every moment is worth trading. Subscribe to this channel if you're interested in learning to trade this way, focused on structure, participation, and momentum. This channel is built to help you understand the market, not chase it.